Now let's come to the fundamental analysis. Some of the stuff that we have is we'll cover in the subsequent session. Highlight ratio screeners. So basically, what you have is basically financial highlights and ratios. You can filter by market cap high to low or a particular range. For example, we are looking for all stocks which have market caps. All right. All stocks which has market capitalization greater than 10,000 crores. So you can get it. Similarly, you have other things like maybe dividend stocks giving high yield. Right? So these are stocks which are giving extremely good yields compared to today's price. So you can filter them. Not very complex. I'm sure that with the explanation that we have had, these things you can always go here, right? So highlights cover some of the really top points. Financial ratios, guru numbers, you can go for some of the terms that we mentioned here was Altman Z-score. So Altman Z-score, if you're looking for safe stocks, right, it's pretty reliable, Altman, right? You're looking at the stocks, right? Right? All the stocks which are pretty good as far as Altman Z-score, that means chances of bankruptcy is much lower here, right? So these are the stocks with that particular criteria. You can go for Pykrosky score. Again, a very good one. Basically, when it comes to investment, these are so any stocks which is having 8 or 9 score, they are very good. Right? So you see that there are quite a few stocks matching this criteria. Should you go and buy it immediately? No, you should keep a track of it. When the stock has retraced, then that's where the time is buying. Right? It's more like a value investing is more like a eagle play, where you keep on observing and you just go and hit at the right time. Right? So some of the stocks may be at a pretty high level already. Right? So should you just go and buy? You wait for the right time, wait for retracements, and then buy. Right? So some of the key guru numbers like Sloan ratio or Peter Lynch is mentioned here. Most recent quarter gives you the best perspective of what's happened in this quarter. So some of the ratios are here in terms of, like, let's say if you're looking at current ratio of most recent quarters, you'll find, okay, I should not be having all stocks, right? So this is where the current ratio is. Similarly, you can look at others. Let me see, 500, okay? That's a better mix. Trailing 12 months is better than financial year, because somewhere if you're looking at maybe at a December, January time frame, financial year is ratios are generally 31st of March. So you're already behind. By this time, there could be a lot of changes. It could be launching of a new product, change in management, change in government policy, or whatever, right? Or war in Ukraine or COVID, anything can happen, right? So the more recent, the better it is. Okay. Same way, you can look at valuation ratios. You can look at solvency ratios. If you are interested in debt to equity, go here, find the stocks which are high to low is a bad number, or maybe a good number where you would want to avoid stocks. Right? Adani Green looks it's very high on debts. Right? So same are some of the other stocks. So we have covered some of these things. I'll let you play. It's very simple. To play here. EBITDA margin, guru numbers we have covered, valuation we have covered, profitability, net margin. So, I mean, the reason I'm going fast is it's pretty much in lines of what we have done. You click on a ratio, on a category, you get some of the subcategories. Click on subcategories, you'll find the corresponding numbers. Carefully crafted of what people generally look for, right? Operational efficiency, quick ratio, cash flow, inventory turnaround. These are all very important ratios. A lot of fundamental analysts, they look for it. Ratio, efficiency ratio. So same thing is basically if you are looking at, okay, the ratios are important. Some of the hardcore guys, they look for the real numbers. So get here. If you're looking for, let's say, revenue, total revenue growing, maybe 5-year CAGR. So 5-year CAGR, this thing is Zomato is 66% purely from revenue perspective. 3-year CAGR, 1 year, 10 years, 7 years not there. Maybe company was not listed by that time, right? Also, if it tells you that this one, right? So SBI card looks good. The revenue growth is good. as well as it is continuously rising for 7 years, right? So every year the revenue is higher than the previous years. Look here. What are we looking at? Revenue. Click here, right? So revenue is continuously going up, right, for at least 7 years, right? This is much bigger. So picture from March 2000. So you can look at both this thing bar and this thing. Then what you have is annual growth rate, right? 1357 years. Year on year change is out here. What is the year on year change? So look at any indicator of your choice, and then you can have all this information, right? Looking at EBITDA or maybe net income, maybe a better one, right? So net income ka chart and some of the CAGRs, year on year growth. So that's how you typically filter fundamental ratios. Balance sheet, nothing a lot to add. The better session would be, or little deeper session will be subsequent sessions.